We're 3 hours into trading on Tuesday, February 22nd. Hello, traders. I hope you had a great 3-day weekend. You couldn't read the headlines today without noticing the Russian invasion of the Ukraine, so that's what's grabbing all the attention right now. Everyone's in risk-off mode. Is it because of that? Is it because of the FOMC statement coming up in another 3 weeks? Inflation rising, Fed hawkish? Yes, all of the above. So right now we've got a market that's just very jittery. Typically, after a 3-day weekend, we have something that I call the holiday hangover. The price action, typically on the day back, is very, very dull. So let's take a look at Thursday's picks. The last time I did a video was on Thursday. I like Baidu. I like the fact that the stock was able to poke above the 200-day moving average. It was strong relative to other technology stocks, and then boom, it sold off. This was not a good pick. Let's go back to Thursday. Let's take a look at the price action. Call a spade a spade. If I give you a bad pick, I'm going to tell you it was a bad pick. I don't have many of them, but I do have them. So you can see how the stock, this is about where the video came out. Really nice opening surge. It came back and challenged the high. But then here, where the video came out, it tried to get going a little bit, and then it just crumbled. And you can see the big sell-off on Friday. Well, that sell-off actually was very bearish because it broke below the 200-day moving average. And now look, today we're below the 100-day moving average, probably going to close below the 50-day moving average. China is going to impose more restrictions on technology stocks. Baidu is in the crosshairs. Stock is selling off. In all fairness, though, I did give you a couple of other stocks that I really liked, and I like the momentum. Again, the focus is on day trading because the market is back and forth, lots of uncertainty. FRO and SBLK were two other stocks that I highlighted. You can see how those are continuing to move higher, and those are both shippers, and those are actually gaining some traction right now. So let's take a look at the market. Let's see what's going on. Everybody's super nervous right now about the invasion into the Ukraine. Typically, and this, I'm not making a statement about the Ukrainian citizens. I'm Latvian, so my heart goes out to them. From a market standpoint, though, typically these conflicts and these wars do not have a lasting market impact. So if I had to guess what would be the full extent that a Russian invasion of the Ukraine might have on the market, I believe we'd test the January low, and that puts us down to the 420 level. This would be worst case scenario. You can see how the market is starting to accelerate to the downside. There's a nice upward sloping trend line. You can see that it's been breached, so we should see some follow through in here. Overnight, S&P futures were down approximately 70 points. Now that includes the price action from Sunday evening when they opened, Monday, the holiday, into this morning. But that 70-point loss was completely offset, and the market this morning filled in the overnight gap. And we can see that right in here. There was your gap down. Actually, the futures had been much lower, and they rallied back, and we closed the gap. But the pressure since then has been to the downside. So I think we're going to continue to drift lower. We currently see that momentum right now, but you can also see mixed candles, lots of overlap in here. We've taken out the low of the day. Was that to trigger sell stops? Well, probably not, because we're starting to trickle lower and see some more selling. This could be nothing more than a buyer's boycott. What the heck does that mean? It just means that buyers are taking a look at the overall tone of the market, and they're saying, I think that I'm going to have a better opportunity to buy lower, and what they would like to see is they would like to see a capitulation low of some type where you get a bullish hammer like that. Once they see that, then they're going to be pretty confident because of the gusto with which the market rebounded here. I'm sure on this day there were stacked long green candles with little to no overlap, and we never looked back. So buyers notice that, and then they notice support in subsequent days, and now they start getting more and more aggressive, and then you get this bounce and this liftoff. But when the market's continuing to come in like this, they're not going to stick their head in the noose. They may nibble, but just tiny, tiny little buy orders just to see what's out there. And you can see the market's continuing to come in, so let it come in. There's no reason to take a swing trade right now with this type of volatility. If you're day trading, this is beautiful. I believe that we're going to continue to chop around until that FOMC statement due in about 3 weeks or so. Then I think everybody's going to take a deep breath. The Fed's going to hike interest rates. That's already priced in. We're probably in the 70 percentile as far as a 50 basis point rate hike. A 25 basis point rate hike is already baked in. It's going to happen. So might a 50 happen? Very possible, because the Fed feels that they're behind the 8 ball. The market doesn't like shocks. If you look at the tone over the course of just the last 2 weeks, it's become much more hawkish by Fed officials. If you take a look at where they were back in September, the majority of them did not feel that we would have any rate hikes in 2022. And now they are all pretty much saying that they can foresee a 100 basis point or a 1% rate hike this year, with many of them saying by the July meeting. That is a shock. They got inflation completely wrong. The market does not like shocks. So now we're kind of dealing with what's happening on inflation and higher interest rates. So let's take a look. I'm going to favor the short side. You can see the market's drifting lower. Let's put up the 5-minute chart. Let's keep an eye on it. You can see how we're continuing to go down. We've got a bearish cross on the 10p indicator coming. I would short this breakdown. You can see on the last bullish cycle, this would be a bullish cross right in here. Typically, it is going to tell us that the market is ready to bounce. So that's what we would be looking for right here. Well, we got a bounce, and that ended up being nothing more than a temporary short squeeze. And this is a tell. When you get those long green candles and it's a solo, there's only one of them, and it reverses and it leaves that long tail, that is a sign of selling pressure. We got a similar one right in here where you had this nice big rally. Here we go, we're going to lift off. No, and it actually reverses. So anybody that bought this bounce here was very quickly flushed out of the position, and then that flush out actually pushed us even lower. Tiny little bounce here, trying to recover that red candle, squashed immediately. This is bearish price action, so look for the market to sell off. We're currently a little more than 3 hours into trading. I believe that we're going to continue to drift lower today. So let's take a look and see what we can find on the bearish side. Showed you some searches last week that worked really well, where we're looking for sell signals across multiple time frames. I'm going to keep it a little bit easier. I'm just going to go into a search called ice cold. This is one of my day trading searches. We're going to take a look at Nike. Nasty, nasty little breakdown here. You can see horizontal breakdown, long red candle, go into the 5-minute chart. Oh yeah, that is the kind of steady selling pressure you want to see. I think Nike's going to be my bearish pick of the day. Continue to go through. Let's take a look at the others. EMB, that is nice bit of selling pressure right in there. Take a look at that D1 chart. Oh yeah, that's weak. You can see the downward sloping trend line. I still like Nike better. Intel, take a look at that daily chart. Oh yeah, nasty horizontal breakdown right in there. Long red candle closing almost on its low. Follow through today. Take a look at the M5 chart. And yes, drift, drift, drift lower. So this also looks like a nice short. I think Intel could work very easily as a good short also. We've got JWN. Retailers got a little bit of a boost this morning. Macy's had some good numbers. Too compressed, choppy, back and forth, back and forth. Doesn't move a whole lot. I don't want that as my short pick of the day. This is kind of nice. This is a reversal. This is British Petroleum, upward sloping trend line. Visually, you can see it here. Breach to the downside, selling pressure starting to accelerate. In general, I think energy stocks are going to perform pretty well with the conflict in Europe, but you can see steady profit taking right in here. So consolidated energy companies may not be a safe play here. That is also a failed breakout. There's your resistance, get above the resistance. There's your breakout. Now we're back below that. It was resistance, now it's support. That constitutes a failed breakout, upward sloping trend line. Yeah, BP, I don't like shorting stocks that are in the upper right hand corner. Typically, these stocks are going to be better longs. You get the support level, you get the downward sloping trend line, you get a breach to the upside, then you get your bullish flag formation. So I'm not as anxious to short these stocks as I am something like Nike, where you've got a nice, strong downward sloping trend line, a nice defined horizontal support level, and then the bottom falls out. Nike is your pick of the day. I like it on the short side. I'm trying to keep these videos short. I'm working on a lot of educational content. I hope to have that up in 3 or 4 weeks or so. Please leave your comments. Let me know what you're trading. Let me know what areas you'd like to see me focus on. Good luck with your trading. Look for more weakness today. We'll see you perhaps Wednesday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.